Our next guest says Ottawa's new mortgage policies have turned Canada's housing market from a seller's haven to a buyer's haven. Joining us now is Samantha Brookes, founder and CEO of Mortgages Canada. So good to see you again, Samantha.
Great. Nice being here again.
So the worm has turned, as they said. No longer the seller's market. This is now a buyer's market because of these mortgage restrictions?
Well, I wouldn't jump that quickly, but most definitely we should see some changes in the market with activity. I would say in the earlier part of the spring.
Or you think that's the amount of time it's going to take for sort of to wash through and we're really going to start seeing the full effect?
I would definitely think that we would start seeing some changes in the spring market.
Now, I heard a lot of from mortgage brokers last week saying in the run-up to the new rules kicking in, which they did on Monday, they saw enhanced activity. Do you see that kind of thing where people who are already thinking of buying saying, I better just go out and get that home now, or I might not qualify for it after Monday?
What we saw last week was an increase in applications. So everyone was trying to get pre-approved or get their mortgage committed before the actual deadline, just so that they would make the deadline and they would be able to carry that commitment through to until like next year if they needed to.
Because when you see the effect in some of the examples we've been showing our audience over the past days and weeks, anywhere from 18 to 24% of your purchasing power suddenly disappeared on Monday if you're looking for that insured mortgage, and suddenly you had to get tested at that higher Bank of Canada 5-year rate.
That's correct. And what that does, that pushes out a lot of the first-time home buyers. And so there's definitely a concern for the first-time home buyers because there's a market there. And if they're not able to purchase homes, obviously it's not stimulating the economy. So just to be able to speak with the government and make sure that the policies make sense to go across the country, because right now we're kind of limiting some of the other regions throughout Canada that don't necessarily need to be penalized for the two hottest markets, right? So
now you said the chance to speak to the government. When I talk to people in your industry, that's what really sticks in their craw with this one. This was dropped on them by surprise at the beginning of October. They haven't had a chance to speak. Are you going to get that chance in your industry to actually go to Ottawa and say, listen, we think you made a mistake here, or maybe you need to tweak it a little bit? Right.
So we do have some champions that are speaking on the behalf of the Mortgage Broker Association, and they've definitely been speaking with the government. And like as of Monday, I think it was Friday, there was actually a change where they did a deferral to the 20% down rule. So previously, when the policy was initially announced, they said that you, if you had 20% down, that you would still have to go through the stress test. Now what's happening is they've deferred that. So you have until November 30th until those new rules come into place. So you don't have to go through the stress test if you have 20% down.
So they're showing a little bit of flexibility then.
Until November 30th.
Until November 30th, yeah. Which is fast approaching. Also November 30th, when we talk about some of the changes they've made, this was the one about the average home buyer coming in looking to say, what can I get approved for? At the end of November, we're going to start talking about the banks who like to put those other mortgages where people put more than 20% down, get them insured anyway, so they can bundle them up, sell them off, securitize them, and then raise money. We're hearing that's really going to hit the industry pretty hard. If you're a monoline lender, it's your only source of generating new funds. Big concerns on that space for you as well?
Absolutely. I mean, what that does is that pushes the rates up because the cost of borrowing for the lenders is a lot greater. So then if they're going to have to pay more, then they're going to push that on to the consumer. So it's definitely a concern.
So getting tested at a higher rate, people getting priced out of the market, is eventually raising the costs for those who are granting mortgages, and they raise rates. These all seem to be things that are eventually going to cool down the market.
Absolutely. That's exactly what the government had in mind when they implemented these policies, but they were a little bit too aggressive. And that's why we need to speak on the behalf of the average consumer who's across Canada to make sure that we're still able to keep the traction going with the real estate industry.
So if they've been too aggressive, if they were looking to cool, and then so they did this and they're too aggressive, is there a danger then that they've gone too far and they're going to correct these markets? They're actually going to drive prices down 5, 10, 20%?
Well, we're not quite sure how low the market will go. That's even if it even goes low. Like, we know that there will be some sort of a correction, but there's no guarantee as to how low the market will correct.
Now, it'd be interesting to me too that you say it's going to take a while, and you said even maybe by next spring when we see the real change in the dynamics in some of the hotter markets. But if they fail to cool down, even though we've taken the first-time home buyer out of the market, I think we have to start asking questions about where the money is coming from. To my mind, two things pop up. Obviously, the foreign buyer is front and center, but also the bank of mom and dad. We haven't talked about that a lot lately. Do you see people, young millennials, looking and saying, I can't afford this home, but suddenly money just comes from a special place, mom and dad?
Yeah, I mean, that's been happening for quite some time, right? Especially when it comes to the down payment. Some parents do not want their kids to go ahead and pay that same HC fee anyway. So what I've seen myself is that a lot of parents will fund that initial down payment, and the kids usually don't have to pay it back. I think that will continue into the new year, and it will definitely benefit the first-time home buyer. But at the same time, it's not to say, like, I mean, if you can't afford a house for $600,000 anymore, then you just can't afford it with the 20% down, right?
Do you think it's been prudent on Ottawa's part, though? You think they've overreacted, but they acted for a reason. They were looking at the market. They're worried about financial stability. Do you think that there was some tinkering that was needed, and just perhaps they went a little too far, but they did need to act? Yeah,
I do agree that they did need to act. It was necessary to intervene. However, it was a little bit too aggressive.
So where does your business go from here? Monday, October 17th is past now. There's new rules in effect. What does your business look like for the next couple of months? 6 months?
Good question. I'm not quite sure. I'm not quite sure what it's going to look like. We just, you know what, we've been down this road before. They've made changes. We always adjust, and we just move forward accordingly.
And the thing is, we've been down this road before. Minister Flaherty, when he was in the role, made a number of changes, and yet we ended up in a situation where some people think housing is overvalued by 30 to 40% in this country. Perhaps, I think I might be hearing you say, they made another change, and maybe it doesn't make a difference at all.
We'll see. We will see. We'll see. I mean, time will only tell, right? Only time could tell what's going to happen. Again, hopefully in the spring we'll start to see those changes. Not hopefully, but we'll start seeing changes in the spring. So.
Thanks for your time and your insights, Samantha. Always a pleasure.
Oh, it's a pleasure. Thank you for having me.
Samantha Brookes, founder and CEO of Mortgages of Canada.